In this video, I'm going to prove to you guys live that trading is just a mathematical equation. And at the end of the day, this is what allows us to be profitable in the long run. Before we begin, you guys have to understand what risk is. For example, I'm going to be using 1 to 3 because that's on average what my risk to reward is. And that has the greatest compounding effects, even with a lower win rate, let's say 40%. That has an EV of around 0.6 R. So after 10 trades, I'll be up around 6 R, which is pretty great. It's not bad at all. Any EV from 0.4 to 0.6 is amazing. So that allows compounding. A lot of people, especially when you guys saw this example right here, the reason why this could even happen is because their EV is usually closer to around 0.05 to around 0.10. The standard professional traders out there, S&B Capital, those type of firms, on average, their traders are usually around a 0.4 to 0.6 EV, which allows that compounding. And there's just no way to have that kind of drawdown right there. And we are on the higher end with just a 40% win rate. What a lot of people don't realize is you guys will see 300% gainers, 200% gainers, 100% gainers, etc., etc. And their full ROI, something to keep note of, is 40%, right? So if they put in $1,000, they risked $200 because let's say their stop loss is around 20%. They risked $200 to make $400, which is not bad, right? That's a 1 to 2 risk to reward. That's not bad at all. But you guys can see they're posting 300%ers, 200%ers, 100%ers, but their full ROI is 40%. So you guys got to realize the math behind that. They're risking $200 to make $400. They could have stopped at 40%, full in, full out right there, and they would have got the same exact amount of money. But just because they start trimming at 20%, they start trimming at 30%, they start trimming at 10% just to lock in gains, and then they just have runners left up to 300, 200, 100%. The only way they're getting a 1 to 2 risk to reward is if it goes to 100%, 200%, 300%, because they trim way too quick and they trim too much of their position way too quick based off their risk, which if the stock only goes to 40% off their 20% risk, right? That's a 1 to 2 risk to reward. But because they were trimming, let's say 50% of their position at 1 to 1, and then, some more off here at 30%, they just let runners go. They only have 20% of their position left. So even if this does go to 100%, they're barely getting that 1 to 2 risk to reward. And if it doesn't go up to 100% or 200% and it only goes up to 40%, even though they're going to say that they made 40%, right? Their highest sell is 40%. Their full return on that trade was just a 1 to 1 risk to reward, which is going to make your P&L chart on a 50% win rate look like this if you're at a 1 to 1 risk to reward. Not saying 1 to 1 risk to reward is bad or anything like that. You guys need to understand the math behind this and stop chasing, oh, this guy made 200%, this guy made 300%. You guys are probably more profitable than your favorite influencers. So don't just go chase these shiny objects because you see big percent gainers. You have to understand the math behind it. They're just 1 to 1 traders, right? 1 to 1 risk to reward versus us, right? I'm going to risk 5% to make 15%. Now you might be like, only 15%. If they're risking 20% and they lose $200 per trade and I risk $200, right? But I'm only losing 5%, I'm going to have to increase my position size, but I'm still going to be risking the same amount. So when they get a 1 to 2 risk reward, so let's say it goes to 40%, because of their position size, they'll make $400 risking the 200, and I'll make $600 risking the 200. So it's the same exact thing, right? This is why I scalp trade. And this is why I don't understand when people don't understand why scalp trading is so profitable. Because if we risk the same amount, right? If I want to risk $1,000 and you want to risk $1,000 and your stop loss is 20% and mine is 5%, I'm obviously going to have to increase my position size in order to risk $1,000 on a smaller percentage, but we're both risking the same amount. Now it's just up to math. Okay, 1 to 2 risk reward. When you go to 40%, you'll be up $2,000. When I'm at 10%, I'll be up $2,000. But when I'm at 15%, I'm actually going to be up $3,000. So you guys can see how that kind of just compounds. So it doesn't matter about this, right? It really just matters about your risk to reward. Now for me, it's about how fast could I get my risk to reward? How fast could I get to that 1 to 3? And with scalping, it's super fast. It's in minutes, right? Why am I going to get the same exact risk to reward or even less and take longer? That doesn't make any sense to me. And plus, I could have such a smaller win rate. For example, 1 to 2 risk reward, 50% win rate, times that by 2 is 1.0 minus 5. Their EV is a 0.5. My EV is 0.6 on a 40% win rate. So I could actually drop this to around, if I do the math correctly in my head, a 38% win rate to be at the same exact EV, maybe a little bit less, maybe like 37% win rate, to be at the same exact EV, the same exact profitability as this guy that has a 50% win rate. So I actually have to try less. And if I get up to a 50% win rate, 50% times 3, 1.5 is actually a 1 EV. So if we are both at a 50% win rate, you're at a 1 to 2 risk reward, I'm a 1 to 3 risk reward, I actually double my profits over time. So for example, this is my profitability over the long run, right? 1 to 3 risk reward, 1 to 2 risk reward. This guy made 20K after 100 trades. I made 200K after 100 trades. Now, it doesn't matter about the position size or anything like that. I'm showing you guys the differences because these are both starting with the same position size, and $0 is how much they lost or made. And this compounding effect is huge, right? Obviously, this guy has more longevity there because look at this difference here from baseline, right? Even if he has a terrible 1 month, he's only down to there. This guy that has a terrible month, he's like down to there. This guy's barely profitable. This guy is triple or double the profitability. And what you guys don't understand about compounding is if I'm double profitable than someone else, right? That doesn't mean, oh, I make $100, you make $50, and like we call it a day. No, it keeps compounding, right? If I make $100 and you make $50, I make $100, you make $50. I make $100, you make $50. I make $100, you make $50. Like the compounding effect is insane. So over time, if let's say I have a terrible drawdown, right? Me versus this guy, you're way closer to baseline. All right, so now that we understand that, let's go to the 3 trades that I took today. Starting off with NVIDIA, we took a loss of around -5%, right? So whatever you want to risk, let's say you want to risk $200, right? You lost $200 on -5%. If you want to risk $500, you lost $500 on that 5%. Whatever your risk is, right? And let's say your stop loss was 20%. You would risk the same amount. You would just lower your position size. Do it based off your risk. Your position size should be based off your risk. So there we go, right? So we're starting off down 5%. Second trade, I took SPY. Now, SPY, I was waiting for that all-time highs, and I made 2R on this trade. Remember, my average is around 3R. I was like 80% out here at that 3R, and then just stopped out break even on the rest of the contracts. So I made around 2R on this. So now we're right there, right? We're plus 1R on the day. Now the third trade that I took today was QQQ. Beautiful trade, by the way. And I made slightly over 3R, but for your guys' sake, I'm just going to say 3R flat. Just like that, right? Risking 5%. Remember, you guys have to understand that it's always about your risk. If I was risking 10% instead of 5% to make this 15%, I would only be at a 1 to 1.5 risk reward. And that drastically changes my profitability. You guys have to understand your profitability is based off your risk. Because if I only risk this much to make this much, it allows my winners to compound. But if I risk this much to make that much, it doesn't compound that much, because now we're just back to baseline where we were after one winning trade, instead of something looking like this, where winner, small loss, winner, that compounds. So now let's add 3. 1, 2, 3. So now we're up 4R on the day. Guess what? I could lose 4 times in a row and be back down to break even. That allows us to be mentally stable for any drawdown period, number 1. Number 2, to not even have any impactful drawdown period, because our risk is so small compared to our reward, right? You guys can see right here real time. That's profitable trading. And when do I lose 4 trades in a row? And if I do, I already have months or weeks of profitable trading that is allowing my winners to compound. So even if we do have a terrible week where I lose every single day, it's going to look like that because they're so small compared to my winners. This is profitable trading. You guys have to understand that it's just about numbers. Soon enough, you guys are going to hear everyone talk about the numbers because everyone's just giving this such generic advice and opinions on YouTube now about trading. And it's just mind blowing. Verified 8-figure P&L traders telling you guys that it's just, an emotional game and you have to control your emotions. Super generic. Any real trader knows that it's not about that stuff. It's just math, right? You have to look at your trading as a systematic, algorithmic, like robot. That's basically like how I treat trading. I just think of it like just an algo that I'm performing on my own. If this does this, I lose 5%. If this does this, I get out at 15%. And that's super profitable. But a lot of people chase dopamine. They're not able to cut their losers this small and they want bigger winners than that. But this is not how it works because this is going to be more profitable than someone losing 20% to make 100%. But they don't understand that. But I want everyone that watches me to be profitable. And this is mathematically how you become profitable. Like you can't argue with the numbers. So hopefully you guys enjoyed this video. I got a couple links down below if you guys want to check it out. And I'll see you guys in the next video. Peace.